Tax avoidance and tax evasion are two completely different things. Tax avoidance is the legal use of methods that the law or the IRS provides for decreasing what you owe in taxes. Basically, you can think of tax avoidance as like making the most of your tax deductions. So what can I deduct from my taxable income this year so I owe less in income tax? And you can get creative here and you can utilize the tax code and get educated on how to decrease your income tax by taking tax deductions. So things that you might write off as tax avoidance, not evasion, could be things like appropriate medical costs or college loan interest, and depending how they are itemized on your return, they may be deductible or they may not be. You just have to know how to structure your taxes to take advantage of these legal tax avoidance opportunities versus tax evasion. Tax evasion is where you are trying to hide your income by not reporting it to the IRS. For example, taking payments in cash and not reporting that cash on your tax return is tax evasion. Or filing a deduction for a medical expense for a knee surgery that you never had would be tax evasion. In the context of a recent video about asking ChatGPT to write you a business plan to start a business that will allow you to deduct all of the expenses around the thing that you love to do, like the example of knitting that I used in my video, the IRS provides tax deductions for business costs, and it sets rules for what it means to be a legitimate business, to distinguish between people who are pretending to be a business so they can just write everything off. So a business does not have to be raking in huge profits to be a business. You could always break even. And in the knitting example, maybe you knit, you sell the sweater you made for $100 and the yarn cost you $40. In this case, you made $60 in profit. If you set your knitting business up as a business, it doesn't matter how many hours it took for you to make the sweater or what the equivalent hourly rate is in your minimum wage or compared to minimum wage. You are going to knit that sweater no matter what, because you love to do it. Now, maybe you're going to sell that sweater instead of give it away. And if that's the case, well, you don't have to make your knitting hobby into your sole source of income to consider it a business and get to write off your yarn. You just have to set it up as a business, and then you get to take that $40 you spent on yarn and write it off your expenses. That is not tax evasion, it's tax avoidance, and it's completely legal.